Do you think that you're missing a trick when it comes to your finances? Do you think they should be working harder? If so, this is the video for you. I'm first going to talk about what I call easy wins for your finances. That is, I would say, using your tax-free allowances. Now, what I tend to say to clients is anything tax-free we tend to grab with two hands. First one I'd like to talk about is pensions. Now, what is a pension? A pension is quite simply a wrapper. Wraps around an investment. It could be cash, it could be shares, it could be bonds, it could be various different things. Key thing is with a pension, whatever happens within that wrapper tends to be tax-free. The other thing is with pensions, effectively you're getting free money from the government. How does that work? Well, if you're a basic rate taxpayer and you put in £80 into your pension, the government will top it up by £20. This is free money. And if you're an additional rate taxpayer, you put in £55 into your pension, the government will top that up by £45. So you can see that a pension is quite a useful tool when you combine the top-up from the government and the tax-free growth within the pension. A couple of things to be aware of with pensions. You have what we call an annual allowance. That means that you can only put so much into your pension each year. It's actually the lower of your relevant earnings, which is the amount you earn, or £40,000. However, there's something quite interesting called carry forward. What that means is that you can actually look back, although it's called carry forward, you look back 3 tax years. If you haven't put in the maximum amount for that particular year, it all rolls up and you can put it into one single year, assuming that's met by your level of income. One thing to be aware of with pensions is at present you can't access them till age 55. That's one thing to be aware of. You need to make sure you're happy for the money to be tied up until that age. However, when you do hit 55, you can choose when you do take the money out of the pension. So you might want to take your 25% tax-free lump sum and take the rest as income as and when required. And this can be structured to keep you below certain tax bands. Another area to talk about whilst we're on tax-efficient vehicles is an ISA. Now, an ISA is similar to a pension in that the tax-free wrapper sits around the investment. 2 types of ISAs you can have, a cash ISA or a stocks and shares ISA. Now the thing is with ISAs, the amount you can invest is capped at £20,000 for adults. However, there are JISAs or junior ISAs for children up to the age of 18, which is £9,000 every year. One important thing is there's no carry forward with ISAs. So what that means is if you either use it or lose it when it comes to make your investment into any particular year. The great thing is ISAs can be accessed at any stage. So if you're saving up for something in the near future, you can pull out the funds from the investment whenever you wish. A quick tip for ISAs, don't go automatically to your local bank or a fixed rate with cash. You should always speak to a financial advisor who have access to all the funds in the market. It's likely they can get reasonable returns for you. One other tip in considering tax-efficient approaches to investing is using your capital gains tax allowance. Now, most people equate capital gains tax to selling things like selling property. The same applies to shares. You have this allowance, which is £12,300 each year for gains from buying and selling shares. In this case, your shares will be wrapped up in a general investment account, and that will open up this opportunity to use this allowance for you. So that wraps up the 3 tips that I recommend that you look at to maximise your tax-efficient investments. I appreciate I've given you a fair amount of information. If you'd like to talk about this in a little bit more detail, just do click on the link below, organise a free, no obligation chat, and I really look forward to hearing from you soon.